Assalamualaikum warahmatullahi wabarakatuh. Today presentation is about tangible and intangible asset. Our member, me, Nabillah Meliani Tildjuir, 18-0102-00-16-1, and Muhammad Hussein Aliefianto, 21-0102-005. Part 1. Tangible asset. Definition of tangible asset. Tangible asset for property or equipment that a company owns and uses in its operation to generate income. Tangible assets are long-term in nature and are not subject to investment or cash it within a year. According to PSAK 2004, the definition of tangible asset is asset obtained in ready-to-use or predetermined from that are used in company operation and have a useful life of more than 1 year. Characteristic of tangible asset. Tangible assets have a physical form and are property on the balance sheet of property, land, and equipment. Fixed assets are initially recorded as assets and then subject to types of general accounting transactions such as 1. Used to produce. 2. There is a physical form. 3. Has economic benefit for more than 1 year. 4. Not for sale. 5. Mastered from the result of economic activities in the past. 6. Used continuously. And 7. Obtained in a ready-to-use condition or both first. Example of tangible asset. Tangible fixed assets are assets that have a physical form and are relatively permanent. Example: 1. Building and structure. 2. Soil. 3. Equipment. 4. Vehicle. And 5. Machine. Acquisition of tangible asset. A. Cash purchase, recorded in the books with an amount equal to the money spent. B. Purchase credit, in its cost and does not include interest. C. Exchange for securities, recorded in the general ledger according to the stock market price. D. Exchanges for other similar tangible assets. The cost must still be used. That is, new assets are capitalized with an amount equal to the price to the old asset plus the money paid. E. Obtained from a gift or donation, also called a non-reciprocal transfer because of a one-way transfer. And F. Acquisition of asset by stock-making. For example, building, tools, and furniture. Companies must allocate all costs, which include material costs, labor, overhead. Overhead costs usually include electric, insurance, equipment, and plant investor.
Kenalkan, nama saya Muhammad Hussein Aliefianto, NPM 2101020005 dari kelas akuntansi 21A. Di sini saya akan menjelaskan tentang intangible asset. Definition: an identifiable non-monetary asset without physical substance, capable of being separated or divided from the entity. Scope: accurate or internally generated intangible asset, accurate through a public sector combination or acquisition, satisfy recognition criteria, power and right included from scope. Intangible inheriting asset, if recognized, must disclosure. Item must be identifiable, separable, or arises from binding arrangement. Controlled. From intangible, often stem from legal rights or ability to restrict access by others to benefits. Recognized. Meet criteria above probability of future service potential or economic benefits, cost, fair value, measured reliability. Accurate or internally generated. Most accurate intangible asset will meet criteria for recognition. Example: software, brands, and trademark in process R&D. If accurate through non-exchange transaction, cost is fair value at date of acquisition. Internally generated, harder to establish recognition criteria. Research phase, expense, development phase, recognition only when criteria meet. For internally generated, do not capitally internally generate goodwill. Intangible items in research phase, items that cannot be distinguished from development of operation as a whole. Capitalist: when expenditure meets development phase criteria, capitalist for the development cost some expansion. Other issue: subsequent addition to or replacement of intangible asset, usually expensive. My capitally if expenditure clearly enhances service potential of original asset, e.g. software enhancement, access finite or identity, useful life if finite, amortize if identity, review for impairment, annually discouraged. Next, intangible asset recorded in a public sector combination or acquisition. Cost is fair value at acquisition date. Intangible asset must identifiable to distinguish it from goodwill, recognized even if not previously recognized by accurate operation. Thank you.